name is Hosseini. My matric number is 82182497. I will present for introduction. Bank Rakyat. Bank Rakyat was established on 28 September 1954. Initially known as Bank Agong and changed its name to Bank Kerjasama, which is Bank Kerjasama Rakyat Malaysia Berhad in 1967. After that, changed its name to Bank Rakyat in 1973. Bank Rakyat was offer banking products and services to individuals and businesses in Malaysia. For example, saving account and current account, Islamic financing in the form of personal loans and mortgage, Islamic credit and debit card, as well as financial planning for wills and investment and takaful protection scheme. Murabaha. The definition of murabaha is refer to a sales contract where the seller sells the price at a profit. Murabaha is known as interest-bearing loans but is a form of credit sales that is acceptable under Islamic law. The characteristic is buying finished goods or product equipment for the short term. It's also profit in murabaha transaction should be known by the seller and the buyer, because the seller cannot keep things related to the price, identity, and quality of the product. For condition, the first is both buyer and seller must meet the condition. The second is the seller must clearly disclose the price and profit margin to the buyer. The third is offer and acceptance between seller and buyer must meet the term of a valid contract. Types of murabaha. Here have two types. The first is simple murabaha, which is the seller sells the good piece on to the buyer by starting the best price plus a margin as a seller profit. The second type is murabaha with order. Islamic bank will buy goods and sells to customer according to criteria and request.
Hi, my name is FATIN ZAFIRAH binti ZURILA and my matric number is A21832251. I want to talk about the variation of factor of murabaha. Murabaha likewise referred to as cost plus funding in an Islamic expenditure contraction, at which point the outowner and customer consent to the cost and rise of an advantage. As such, murabaha is not an interest significant loan gori ribawi, but is a satisfactory form of credit deal under Islamic society. In a murabaha contract of business, a customer petitions a bank to purchase an article in their favor. In a murabaha obtains transaction, the bank buys an advantage and therefore sells the advantage back to the customer accompanying profit charge. The best habit for murabaha in accordance with Sharia is that the banker himself purchase the possession and keep it in welcome own control, or purchase the possession through after second customer named by him as power before he sell it to the consumer. Thereafter, he purchased the merchandise from the banker for a negotiated price. Many bankrupt defaulters concede possibility be blacklisted and prohibit future loan from some Islamic banks as a design of curbing murabaha default. In the case of default for one customer in the fee of price at the due date, the price cannot be raised.
Hi, my name is Gan Huiling A21A2483. I'm representing the illustration part for Murabaha. Murabaha is a type of contract or method of selling an asset in which the seller has indicated the cost of the asset to be sold and then sell the asset to another person by adding some profit to the cost of asset. The buying price, selling price, and the profit margin must be listed in the sale agreement. The Murabaha fee can be paid in cash, pay in installment, or pay in full amount after a certain period of time. Murabaha transaction consists 6 steps. First, the seller or supplier of product will sign the master financial agreement with the Islamic bank. Second, for the acquisition of asset, the Islamic bank will sign an agency arrangement with the seller. Third, the seller will purchase the item and receive the delivery and give it to Islamic bank to transfer the risk to the bank. Fourth, The Islamic bank will pay the seller the cost of asset. Fifth, the buyer submit an offer to the Islamic bank to acquire the asset or goods. Sixth, the buyer pays the agreed price to the Islamic bank in cash or in installment or in full payment.
A very good day to sir, and I would like to introduce myself. My name is KANDASAMY and my registration number is 821A3067. Today I would like to present the advantage and disadvantage of MURABAHA. The first advantage of MURABAHA is it has excellent accessibility. That means MURABAHA is readily available since Islamic financial institution all over the world accept it. It offers a substitute for Muslims who want to stay away from interest-based transaction, making it a particular choice for a significant section of the world's population. The second advantage of MURABAHA is MURABAHA complies with Islamic principles. Given that it follows the rules of Islamic finance, MURABAHA is regarded as a Sharia-compliant funding method. It is suitable for people and companies looking for halal financial solution because it is built on the idea of asset-based transactions rather than loans or money. The third advantage of MURABAHA is that transactions are very transparent. Transparency is a hallmark of MURABAHA transactions because both parties are aware of the price and profit margin involved in the asset. The fourth advantage of MURABAHA is so flexible. MURABAHA allows for repayment flexibility. The repayment schedule can be negotiated between the buyer and seller to fit the buyer's resources. This flexibility may be helpful for those with cash flow uses or issues enterprises that experience seasonal incoming swings. The last advantage of MURABAHA is the MURABAHA system was established with an eye toward positive community development. This is because it is imperative to understand that core principle embedded in the so-called profit sharing scheme. So every coin has a two sides, so MURABAHA also has some disadvantages. The first disadvantages of MURABAHA is lack of direct asset ownership. This is because until the buyer pays the total amount owed, the seller retains possession of the asset in a MURABAHA transaction. The second disadvantage of MURABAHA is a complex process, which means documentation and contractual agreements for MURABAHA transaction can be intricate. The parties to the transaction are responsible for ensuring all the applicable laws and Islamic finance principles are followed. The third, MURABAHA is a higher cost. Compared to traditional interest-based financial solutions, MURABAHA transaction may be more expensive. The fourth disadvantage of MURABAHA is MURABAHA also has limited scope, which is MURABAHA works best for asset-based financings, but such as buying goods or commodities, but others it won't. Last but not least, the MURABAHA system has a high potential that it will be abused or misused by others. The fundamental essence of MURABAHA may be undermined by financial institutions that structure transactions. However, in a manner that is similar to traditional interest-based lending. To stop such misuse, proper supervision and respect for Sharia are required. Thank you.
Hi, my name is ZAFIRAH binti ZURILA and my membership number is A21A3251. I want to talk about comparison between conventional and Islamic product. Compare the MURABAHA contract accompanying the counter contract accompanying the conventional bank. In MURABAHA contract, the bank purchase a merchandise as per the request of the customer. In MURABAHA, the price of the contract is established and cannot be altered later, and although the fee may be accomplished vulnerable or installment or an associate of two together. A MURABAHA contract is only valid for new property and buyback composition is forbidden. Placed as an original loan can stop living for some purpose. The key dissimilarity between MURABAHA and conventional loan is of the contract building.
A very good morning. I'm Sinthu here and my metric number is A21A3077. So today I will be explaining the conclusion and recommendations. Profit loss sharing is one of the most important principles of Islamic banking and it is thought to bring wealth and unlock economic potential. However, due to a number of associated risks such as asymmetric information issues and moral hazards, as well as some difficulties in financing evaluation process, many Islamic banks are still reluctant to offer financing products with such underlying contracts such as Mudaraba and Musharaka financing schemes. Furthermore, from a regulatory standpoint, a risk sharing plan between banks and their customers should be a key premise that underpins Islamic banking's capability to ensure financial stability and deepen the link between the real and financial sectors. However, authorities require Islamic banks to provide greater capital against risk exposures than exchange based financing. Nonetheless, Islamic banks should not view the extra capital requirement as a barrier to offering PLS contracts. Finally, from a customer standpoint, it is debatable if the consumer as an external element is the primary driver of low-level PLS finance uptake. Customers do not choose this manner of financing for of own preferences, but rather than owing to lack of product information. As a result, the Islamic banking industry has an obligation to raise awareness and educate their customers. This study suggests that all parties must modify their attitudes regarding Islamic banking operations, which do not have to operate in the same way as traditional banks. Islamic banks may face greater risk in order to get a higher return, so a comprehensive Islamic risk management system is required to limit possible risk while adhering to Sharia standards. Fintech, such as smart contracts and blockchain technology, can be used to create an efficient financing process, while regulators must play a larger role in building a regulatory frameworks that supports the Islamic banking business. Finally, all market participants in the Islamic banking businesses must continue to raise public awareness and information about the PLS plan. Thank you.